Hey everybody, it's Mark Sebastian, your only option. And today I'm going to talk to you a little bit about a feedback loop. And it has to do with the price and trading action from Monday, October 12th. So what I want to show you is the triple Q. And the triple Q, an index, had a 3 3/4 up day on a gap with continued pressure higher. Now, what's interesting is that the VXN or vol Q, right, were up. VXN was up 0.84, And if I look up vol Q, I'll give you the final quote there. Vol Q was up $1.80. All right. Now, one of the things I really like about vol Q is that it tells me at the money volatility. So as we're rallying, it's looking at the same at the money volatility. So you get a much clearer idea of what's actually happening with implied volatility. So if volatility is going up as a stock is rising, that tells you there is demand, and demand is on the upside, right? So this is the key. Let's look at October options in the triple Q. Set my vols here. And look at the upside volume in the triple Qs. Trading just under 295 right now. Look at how 55,000 of the 290s traded today, 66,000 of the 295s, 35,000 of the 300. Just incredible volume, right? The 90s were, and the 90s and the 95s. So why is that important? Why is that important? Because let me tell you something. When you buy a call, you just hope the stock goes up. When a market maker buys a call, sells you that call, though, they don't want to get beaten by the market going up. So what do? They hedge, right? So now, if I, on the 295 strike, sell 10 of these calls as a market maker, it gets me short 489 deltas. That's 500 shares of the triple Q. Well, triple Qs are up $10. Do you think I want to be short 500 of those? No. So now I just sold the calls. So what do? I buy shares. I buy 500 of them. And that gets me what we call delta neutral, right? It also gets me short gamma. So two things happen. One, if enough people are buying upside calls, that is going to produce a lot of delta for market makers to buy. Well, if market makers are forced to buy deltas, what does that stock demand naturally do? It causes the underlying to rally more. All right. Now, because I'm also short gamma, as the underlying rallies, guess what I have to do to cover my short gamma, to manage my delta? I have to buy more stock. And so this creates a feedback loop. And that feedback loop, and this is key, has gone completely out of whack since Robinhood started because retail traders love those out of the money calls so much. So as out of the money calls start to get meaty, start to get a lot more delta, and market makers have to buy all these calls, have to buy all of these stock to cover themselves, the stock keeps going higher. Now, when does it end? When does it end? That's a secret that I'm going to share another time. Have a good day. Your only option.